James Cooper, how you going, mate? You've just back from the Noosa Mining Conference, and I thought it'd be a good idea to get you on camera and chat about what you saw there, what the vibe was. So yeah, how was it, mate?
Yeah, absolutely. It was really worthwhile. It was a 3-day event up in sunny Queensland in Noosa, so it was a really nice spot. If readers aren't familiar with the Noosa Mining Conference, it happens twice a year. There's one in July and one in November, and it's really just a collection of these junior resource companies across mostly exploration. There's a few developers there as well, looking to sort of kickstart old operations. But the focus really is on exploration. But even within that bracket, there's a pretty diverse range of companies. So you might have anything from really tiny micro cap, 5 million market cap type companies, all the
Mhm.
way up to sort of, say, almost 500 mil market cap. So a real range of offerings. Then in terms of the commodities, you've got uh, different gold, copper, oil and gas. So there's energy there as well, uranium, even hydrogen, and all these sort of little niche commodities. So it is really handy for someone like me, just who analyzes these companies, not necessarily at the really small end, but just having all these companies, all the MDs, just sitting there under one roof. So it's really interesting just to talk to them, get their take on what they do, and just all the different commodities that are sort of in focus at the moment, which is handy too.
I was going to say you presented there as well, so we'll get to that in a minute, and maybe some of the specific conversations that you might have had. But just in general, I know the environment for junior miners has been pretty tough for the past couple of years. You know, capital hasn't really flowed down to that section of the market. Did you notice a difference in the, I guess, sentiment at that end, given that this conference came just on the back of those announcements from the Chinese government about stimulating their own economy a bit more? Now, I've chatted to China insider or expert Louis Vincent gave about this pretty much around the time of those announcements, and he was of the view that it wasn't necessarily going to be commodity intensive favorable. So it wouldn't have been, potentially like the past stimulus impact on iron ore and things like that. But presumably, a growing Chinese economy is still a resource hungry economy, and they do need to import lots from Australia. So just wondering what the feeling was on the back of those announcements.
Yeah, well, this was kind of touched on what I did present at Noosa. So just this idea of the commodity cycle. So when we look back at the last cycle, which was really iron ore driven, the infrastructure boom from China, but then it's something I mentioned this in the conference that this sort of next boom, if you believe in a sort of commodity boom or cycle, this upward phase is probably going to be more directed with sort of critical minerals, so individual metals, niche, not necessarily lithium or some of the more sort of commonly talked about commodities, but I think very specific minerals, which sort of are in very niche markets. So I think that's going to be one of the key characteristics that would typify this commodity boom versus what we saw last time. But
So, what
saying,
specifically, in terms of the specific metals, what sort of things are you? I mean, I know critical minerals or critical metals covers a sort of pretty broad spectrum. So, specifically, what are you looking at there?
yes, I think it's really important to consider what Trump, what that election could bring in terms of certain metals. So going back to the China theme, so rare earth. So China's a real dominating player in processing certain minerals like rare earths, graphite, even copper. It's a major refiner of copper. So and aluminium. So it's just these different minerals which China processes, which could really really affect supply chains. And this is I mentioned key words which typified the last mining boom. So infrastructure, um, uh, iron ore, these types of things were the sort of narratives that typified that last boom. But this time around, it's more about trade embargoes or tariffs or critical minerals. So I think each boom has different demand drivers, but one of the key factors which typifies each boom or common theme is this sort of underlying shortage. So I think not many people would have thought that back in the last mining boom, there was a deep underinvestment in commodities throughout the 90s leading into that boom. So it's really the sort of foundation. But then with each cycle, you have different demand drivers driving that. So that's what I touched on. And I think you can see that with all the companies at these events. So there's certainly not a lot of iron ore junior mining companies coming up. It's really these niche things, even like kaolin, which is a clay which is used in very specific applications with very sort of um, narrow supply chains, so just very certain regions. Another one is titanium, so that's a commodity which has very tight supply chains in terms of a lot of supply comes from Russia, West Africa, so some of the more politically unstable regions. So it's not all just China. That's what critical minerals are. They're commodities which have certain supply constraints which could affect the stability of future supply. So that's a very broad definition of what critical minerals are.
And a lot of these minerals as well are very, I guess, crucial for the military, which under Trump, I guess one of the things that's been highlighted is the fact that there's been underinvestment in US military capability. There's obviously a lot of material being used in Ukraine war, so presumably there's that strategic importance in making sure that national security interests are looked after as well, and that goes back to the supply chain. And if you've got a supply chain that is dominant or relies on Chinese supply chain, you want to try and re-engineer that.
Yeah, absolutely. And I think that's where, if you had, say, US domiciled projects, that's where those companies could really get an advantage. And there are a few Australian companies which hold exploration or development projects in the US, so they could be at an advantage in terms of getting any kind of Department of Defense funding or any other sort of Trump-led initiatives to sort of help pull away that dominance from China. So keeping an eye on companies with that sort of aspect could be one of the key features, and there are a few of those at the conference which I spoke to.
So going back to the conference, I think I mentioned at the start, the mood of the presenters and the private conversations you had. Where do you think that sort of stands in terms of the junior end? Because they've been through a pretty rough patch. Just not a lot of investor interest. Is that starting to come back into the market now?
I wouldn't say there's been a huge shift over the last 12 months. I'd say the investment side is still down, but there's the hope, I guess, that this capital will come back, and I think that is driven by people who have been in the industry for a long time and understand that there just hasn't been investment or development happening, especially at the junior mining end. So that will inevitably cause the cycle to turn, and for commodity prices to tick up. It's the way every cycle has moved. So it's really just continuing to be patient and really waiting for that inevitable liquidity to come back into the industry. But one of the key things I think for an investor is just to look at, especially if you're looking at junior mining companies, is to really get a sense of how much cash they hold right now. So if you're looking at a company with, say, less than $2 million in cash, that's very low liquidity. So that's puts them
They're going
at
to be
a sort
raising
of
capital at some point.
heightened risk of raising capital, even just paying bills, but also the aspect that they're not going to be doing exploration, so they're not going to be adding any sort of short-term value for investors. So I
So, what would
think
you say a minimum cash balance for a junior operator, obviously with no cash flow coming in from operations? What do you sort of look for a minimum, or what would you suggest for investors looking in this space? Minimum cash balance you'd be looking at?
yeah, I would say more the better, but 4 or 5 plus would definitely be a minimum, and that's can be tricky to uncover companies like that. I guess just one example. I'll try to remember the name. So Platinum Resources. This company was actually a bit of an outlier. So it held 12. It holds $12 million in its in the bank, but it has a market cap of 12 million. So it just sort of demonstrates the sort of deep value that you can see in the junior mining sector. So
Yeah.
this company it's basically just valued based on its cash position. So
And it's
you're
got a resource,
effectively,
presumably.
what's that? Sorry.
It's got a resource, presumably. There's something there in addition to the cash.
It has an early resource, I think, but it's really just an exploration play. So you're getting you're getting its exploration projects virtually for free,
Yep.
with cash in the bank of 12 mil and a market cap of 12 mil. So
But that's how
it
the
just sort
market
of
works, isn't it? When there's negativity around, the investors don't want to attribute any value to potential upside, and then in the middle of a raging bull market, the imagination goes wild, and huge amounts of value gets attributed to something that may or may not happen.
absolutely, yeah. So with that, I think this is the time where you should perhaps maybe look at a sort of steady position into some of these companies, especially those that do have a decent cash position, because that will see them through any more any more sort of dark spots for the sector. But I think there's definitely green shoots. We saw that stimulus from China earlier this year that
Yep.
started to push some of the sentiment back into the junior mining sector. But at the moment, it's still mostly flowing into the top ends of the producers, which is still a natural progression of the commodity cycle.
Well, it just shows you where we are. It's still early stages in terms of the sentiment and the capital flowing down into the higher risk opportunities. I was going to ask. I'm a natural contrarian, so from the perspective of you attending the conference, what would you say would be the big contrarian sort of play there? So, for example, which resources weren't people interested in? What resources were not well represented in terms of presentation? What would you suggest that would be?
And you'd like this one. So I think definitely just the sentiment and the number of people visiting different exhibits for the presenters. There would have to be coal. So there were a couple of junior coal developers, and they weren't
No one
receiving a
wanted to
lot of
borrow them.
love. They weren't receiving a lot of love from investors.
That's a great
So
sign.
yeah, not a lot of people
Well, funny you
chatting
say
to.
that. I just wrote about well, the last couple of weeks actually I've been writing about New Hope Corporation, which is like a very large coal miner, hugely profitable. It's got EBITDA margins of like 45%, return on tangible capital over 20%. It trades on a PE of like 8 times and a dividend yield of nearly 8% fully franked. It came out with a great quarterly report earlier this week. It's generating huge amounts of cash, and the market just isn't interested in it. It's
Yeah,
quite incredible. So, I guess your view of the juniors is just the same view
yeah,
at the larger end of the market as well.
yeah,
It's good
absolutely.
signs.
And it was interesting. I listened to a few of the presentations from a couple of the coal companies. One of them was Australian Pacific Coal, um, and this company, I think it's based in New South Wales. It's looking to revamp an old operation. So I think there really is opportunity. Obviously, permitting is still an issue or will be an issue, but it's
Yep.
just interesting that these companies um, are at least getting some investor interest to sort of put capital into these long-term projects, which will take time to develop. So interesting, there is long-term capital still going into coal. So it's a market that wasn't receiving much love at the conference, but I think it's still a critical aspect to our economy. And interesting, I was just talking to one of the exploration managers at one of these little coal junior companies, and I do have to double check this fact, but he told me that the European Union added coal to its critical minerals list. So that just he was an exploration manager, and obviously talking up his company, but it's just interesting if there's this need from Europe especially to place this
Yeah, I mean, there's a big
importance on.
difference between the reality of what the world needs in terms of energy versus the perception around where people think demand for coal is going in the short term, and that's been one of the main reasons why I've continued to be bullish on it. Moving on to another commodity, and maybe this is at the different end of the spectrum to coal. Lithium has always been, when I say always, last couple of years, been a very popular commodity to follow. Went through some, pretty big price cycles over the past 5 or 6 years. Now going through a pretty nasty down cycle. Just wondering what the vibe was on the lithium front, because I know a lot of people do follow that market and are probably interested to hear whether we're close to a bottom for the lithium market or whether there's still some pain to come.
Yeah, that's another area. There wasn't a lot of representation at the conference,
That's
so
interesting.
not a lot of lithium juniors, and I think there's probably good reason for that, given the steep selling. So perhaps maybe another contrarian
They're too busy
indicator.
mothballing mines and trying to
Yep.
save their pennies.
Yeah, and especially among the juniors. So you've got a lot of explorers and early developers who came out from that lithium boom back in 2022. So these projects, yeah, you're right, would have really been mothballed and all the way up to the top as well. So
Is there a risk now that Australian the lithium companies are too high on the cost curve, given that global production costs are probably a bit lower than here?
yeah, so as we were chatting about earlier, so I think there's definitely a risk that these hard rock spodumene deposits, especially underground deposits, are becoming too expensive based on the current spot price for lithium. When you compare it to, say, lithium brines in Chile, South America, which are generally lower cost. And then there's other avenues for lithium production, which is coming from these old oil wells, and they're actually able to pull out lithium brines from these oil wells as well, which is relatively cheap. So there's that's certainly putting a risk for these sort of traditional hard rock spodumene deposits in Australia. So I think it is a risk, perhaps getting into these higher cost companies, and perhaps a time to sort of really focus, if you are going to jump back into this sector, focus on low cost operations is probably the key factor, and obviously they'll do better if lithium prices recover as well.
Well, I think that's the key point for just about any commodity stock, right? If you're in the lowest cost operator, you're always going to survive down cycles and those sorts of things. But yeah, lithium's a tough one. It's a sector I've always steered clear of. I don't understand it enough, and it just seems to me that the rest of the world produces a little bit cheap. It's probably a bit like nickel, right? Like Australian nickel producers are really suffering. Was there any representation or views on the nickel side of things at the conference?
Not a lot of nickel. Again, maybe another contrarian indicator. As you know, so nickel laterites, which has been a big thing with Indonesia coming on board with flooding the market with
Yeah.
what's called nickel laterites, which is different to most of what we produce in Australia, which is nickel sulfides, and
Yep.
again higher cost operations because you've got this hard rock mining. And the nickel laterites are usually very shallow deposits, which can be extracted quite easily, but they do require different processing techniques. and Indonesia received a lot of capital to sort of invest in that. So that's flooded the market. But again, I think it will potentially reach a turning point when prices recover, and I think there's not a lot of clarity on how much China is sort of footing the bill to get these Indonesian projects, and maybe how
Yeah.
profitable they are on a sort of standalone basis. So it'll be interesting to see how that plays out if China starts to pull back on some of its investment into Indonesia, which probably isn't going to be happening anytime soon. I think China and Indonesia have a pretty good relationship, so I think that probably puts some long-term pressure for the nickel market.
Yeah.
Yeah.
What about, last question, on the commodity, on the different commodities, bauxite and aluminium? I know that China's a huge consumer of that as well, and I know there's been some issues in Guinea, which is where China gets most of its bauxite from. Australia is its next largest market. Most of the bauxite in Australia is, I guess, mined by South 32, Alcoa now, that it's merged with Alumina earlier this year. So the bauxite deposits are wrapped up in the bigger players. I think maybe Rio Tinto's got a little bit as well. Any juniors on that front that are worth mentioning?
Yeah, there's not a lot of juniors that I've really found that can really capitalize. It's an interesting market, just as you say, that's very limited to Australia and West Africa. So it's very limited in terms of where supply can come from, which is always fundamentally is really good for commodities.
Yep.
Um, and it is a difficult market for smaller investors to get into because it is dominated by the bigger players. So
Well, you can't
I
really get the
think
pure exposure, can you? Because
that
the South
mm,
32, you're getting a diversified commodity producer, and Alcoa is obviously a massive vertically integrated aluminium producer with bauxite and alumina and aluminium. So it's very hard to get that pure play exposure. I think there is one small company, Metro
there
Mining.
is,
Yeah,
yeah, there is, but I think there may be more opportunities if we sort of see this commodity cycle turn, and you maybe see a few more juniors or revamping of old projects and looking to develop those and starting up new companies. So if aluminium prices, which have actually performed quite well over the last few weeks, um, does start to tick high, you might see some more opportunities enter the market. But there's really a limited space at the moment. So I think there's opportunities there, especially if you talk about the green energy transition. Copper is often thrown out there as essential for the grid, but aluminium is less understood in terms of the role it plays. Often it's used much more heavily in grid installations. So
yeah,
it's certainly going to benefit from that trend. I think if copper prices go up, that will also be really good for aluminium because it just pushes the incentive to look for lower cost options.
yeah,
And really, aluminium is the only alternative to copper for this sort of uh, grid installation. So
yeah.
it's certainly one to watch. In terms of investing in it directly, it is difficult, but I think there will be more opportunities.
And before I let you go, I probably should ask gold. I mean, gold's obviously been the biggest outperformer or the strongest performer in the commodity space, even though it's probably not necessarily a commodity, it's more of a monetary metal. But gold juniors are always well represented, and capital generally gets to that part of the market more so than others. So I'm assuming there was a good couple of gold juniors on the presentation front.
Yeah, that's right. So there are plenty of gold juniors, and as you say, they're already always well represented. Gold is one of those commodities which is easy to bring to market. So you mine it, and it's fairly easy to process and sell directly to market. There's always a buyer for gold. versus these critical minerals, which do face a tough time trying to find markets because it's very specific, very niche. So it's easier for a junior gold company to sort of make it through the battleground of getting through development, and they can also be smaller operations. Whereas things like copper, you often need a large scale deposit to make that profitable. Whereas gold juniors can sort of operate on lower margins and smaller operations. So there's always opportunities, and especially right now with gold prices trading at all-time or near all-time highs. So that was well represented at the conference. As always, I think gold juniors still haven't performed as well as the mid-cap or larger producers. There are some sort of green shoots there as well. I think this is one area of the junior mining market where there is definitely some optimism, and that was definitely on display at the conference. And I think if you look at the gold junior market, I think that could set the trend for other mining juniors over the months ahead, or as the sort of cycle turns. I've held to the idea that gold tends to lead in these big commodity wide booms. So I think that's still the case. We've seen some bright spots for copper. Copper hit over $5 a pound earlier this year, so it's come back obviously, but I think there's definitely some good signs with gold ticking up in some of the juniors.
Yeah, I read about that in the Insider earlier this week. The whole commodity sector since the Trump election has taken a hit purely because I look at it as a mechanical reaction to a strong US dollar. The US dollar's gone up, so commodities have just gone down in response to that. And I think it's more of a market reaction rather than a fundamental reaction. So maybe now it's a good opportunity to take more positions or to add more capital to the sector after that deep sell-off. And even companies like Lynas, we were talking about rare earths and critical minerals at the start. Lynas has probably fallen 15-20% in the past week on no particular news, and whether it's got something to do with perceptions of the Trump administration, I have no idea. But there's just been a lot of strange moves, and you just talked about copper. Copper pulled back quite sharply as well. So if you're right about this, where we are in the cycle, I think it's probably a good time to put some capital to work there.
Yeah, and I'll just finish up with one last point about the sort of Trump and what's happened in resource markets over the last couple of weeks. What I wrote to readers yesterday, so diggers and drillers readers, was just the fact that throughout Trump's first term in office, the commodity prices actually did very well. So iron ore prices doubled from his inauguration to the end of his time in office in 2021. So copper also was up 40% over that time. So a Trump re-election is not necessarily bad for commodities. Is all I'm trying to say.
Yeah,
it's not perfectly clear on why commodities perform so well under Trump in the first term. There might not be a direct link there, but it just shows that Trump was heavy on tariffs and anti-China narratives in his first term, and he's doing the same thing again, which has caused a lot of panic in the resource sector. So if we take that first term in office as an example, I don't think it's a time to panic, and it could offer some good buying opportunities.
Yeah, I agree. I don't think it matters who's in office. The cycle does what the cycle will do. It doesn't care who's sitting in the White House. So All right, mate. On that note, thanks for your time. We'll leave it there, and we'll catch up with you again soon.
Thanks for tuning in to FatTel Daily. If you're ready to take a new approach to building wealth, avoiding the same old mainstream ideas and investigating new market trends, then make sure to hit the subscribe button and turn on post notifications so you don't miss a single video. And as a thank you, we've got a free report just for you. It is packed with actionable insights that show you how to capitalize on an alternative investment idea that you'll unlikely find anywhere else. You can download it right now by clicking on the link in the description below. So, if you're ready to discover strategies that the traditional market just doesn't offer, grab your free report. Until next time.